It's halfway 2020. The stock market has already crashed. Now the question arises, how do we invest our money? Well, today I'll be showing you 4 tricks that you can apply right away so that your money will be safe, and I'll be showing you how you can profit from it as well at the end. Let's get into it. Hey, what's up you guys? Lukas here from excelwealth.com. Good that you joined in today, because in today's video, I'll be showing you 4 tricks that we can use and apply right away, although we're actually recovering from a stock market crash. And of course, I'll be just going through these tricks as we go along in my story. Now, the first trick that I actually want to tell you about is we've got different kinds of asset classes. We have the stock market. It's one of the asset classes that you can put your money in. It could become an asset if you know what you're doing, and that's how you can make money on the long run, of course. That's why it's called an asset class. You know, even if you would be buying cars and then selling them off, you know, or sticking onto it because it's a very fancy old classic car. If you do that, then yes, it becomes an asset class. But the moment you just buy a car to drive it yourself, do nothing with it, then driving it, then it's just a liability class. It's just taking money out of your pocket, which is not a great idea. An asset class is, of course, something that will grow your money over time. Same goes for real estate. If you just own one home that you'll live in yourself with you and your family, then it's a liability class. But the moment you own more homes, you own multiple homes, and you rent them out to other people or you flip them for money, all of a sudden, it becomes an asset class. And this is something that you should really keep in mind. Because the first mind trick that people use, and especially the rich and wealthy, the moment you do that, of course, what happens? You can start making a lot of money. We're talking about making money during this, recovering time of stock market. And what else you should do, of course, is hitting that like button. Okay, let's continue. So the first thing what you should do, of course, is diversifying the asset classes that you own. Now, if you're an investor and if you're a serious investor, how many asset classes do you have? So the most important thing is, if the one asset class is not doing so well, there are different asset classes that are still doing well, even though we might be in a stock market crash. And that doesn't even really matter, because if the stock market is not going so well, that's fine. But in a different market, it is going well. And that's the interesting part. Even during this crisis that we had, I could just keep on working full time if I wanted to. There's so much work there. We can still make money in a different class. This is why we should always diversify the asset classes that we have. Now, the interesting part is this. If this line would represent the stock market flows, it goes up and down, and I'm not putting any times to it. But the interesting part is this. In most cases, what you see is that the real economy is this line, and the blue line is the stock market. So the stocks are always slightly slower than the real economy. That's something interesting to keep in mind. So even if the real economy is struck today, doesn't mean that the stock market breaks down at the same time. It could be, but it could also have a delay of just several weeks. It's possible. I'm holding a different color here because there is another market as well. It could be that there's another line, and this is a different asset class as well, and this is what you see in real estate. And this is what you see, that there is a differences in all these different asset classes. Now, real estate is, again, slightly slower compared to the stock market cycle. And these are the cool parts to know. The moment you know how this works, take a look at this. When the economy is going up, the real estate hasn't gone up yet. So it's a good idea to think, hey, you know what? Even if it's a low tide for the real economy, you're just typing it up like this, this is not a complete straight line. You'll see that the real estate business hasn't fallen down yet. So it's still a good time to just buy in real estate. Why not? Don't worry about the market. So this is why it's very important always to diversify your asset classes, because then you're just actually protecting yourself. And that is mind trick number 2. Because mind trick number 2, This is a trick that the rich and wealthy use. What the rich and wealthy do is they create an insurance for themselves. No, no, no. The rich and wealthy don't really buy into an insurance company or something like that. Either they own the insurance company or they create their own insurances, which is a cool part in this. Take a look at this. This is what Ray Dalio actually just told us. Now, even back in November 2019, he says, the moment the market is going well in the one market, use the profit that you gain from that market, for example, the stock market over here. So you don't know, back in 2019 in November, we didn't really know what to do because we didn't know that the stock market would fall, right? So somewhere back in November, when you're still having a certain profit, Ray Dalio would say, you know what? Instead of having all your money in that asset class, what you should absolutely do is take a little profit from that market and invest it in some other market. Because, hey, if you do that, you're creating a certain insurance for yourself. What happens is, so if the market of the stock market that you're in, so if the asset class that you're in at that moment, you use that little bit of profit and you invested it in a different asset class, what happens is if the market goes up more, so it goes up more, then you'll be like, yeah, it's totally fine. But if the stock market crashes at that moment and you invested a part of your profit into a different market that is not crashing, then you'll be like, yeah, I didn't lose any money. It's a great bet. If you bet on a roulette table only on either red or blue, did I just say blue? Red or black, I meant. So if you only bet on black or red and it goes on the other color, then you're screwed. Like, oh my goodness, I just lost $50,000 just like that. Yes. But if you split it over, so let's pretend that you're not only betting on black or red, but you're betting on both. But you know, your main pot is on red, and there's a slight part that's in black. The moment it goes on black, you'll be like, I know I had a loss here, but I still have a little bit of a win as well. And that's why diversifying your asset classes is so important. That's what Ray Dalio also teaches us. Creating an insurance for yourself to keep your money safe and yet still be profiting at any time of the year, even if we're in a market crash. But yes, this is why diversifying your asset classes and creating an insurance as a method for yourself. This is what I do all the time. Now I'll tell you this. Currently, I'm investing in the Netherlands, I'm currently investing in the US, but I'm also investing in the UK. Why? I'm creating all kinds of insurances in different countries. Before we go into mind trick number 3, I actually want to give you one example that you can apply right now in this video. And you might be thinking about it, okay? So you can pause the video if you want to. And if you pause the video, do be sure to like the video as well. The thing that I would like to ask you that you could do right now, and this is actually part of the mind trick number 3. Now let's pretend that you, I don't know how much money you have, but let's start with 5,000 bucks, okay? So you have $5,000 lying around, and that you already know I want to invest this 5,000 bucks. But the question is here, when do you invest that 5,000 bucks? So every time when you take a look at the market, you have already know what you're going to invest in. You've already taken a look at the previous past performance of the certain stock. Now the question is, when do you invest? Your stock has been performing just like this. You know, it's going up. It went down a little bit because there was a stock market crash or anything. Now the question is, it's somewhere over here. Are you going to invest today or this week or this month? Are you going to invest? That's the question. Now, if you have a 5,000 bucks and that's your total budget, what happens if you think, am I going to invest today? And then what happens is red. You're like, ooh, you know what? I'm not going to invest today. Tomorrow, what happens again? You're like, you have the same question, or next week or next month, depending on how you invest, of course. But the next time you want to buy, you're like, should I invest today? Another red. You're like, oh, goodness, I'm not going to invest today because that's a bad day again. This is what happens if you wait longer and longer and longer, because it might be red all the time. And you're every time like, yeah, you know, I did a great job by not investing today, not investing my 5,000 bucks today. Because, hey, if I take a look at this right now, it's all red. It's red, red, red. Every time I see it, it's red. So it's still going down. So it's a good idea that I didn't invest yet. But then all of a sudden, what happens now? It goes up. And you're like, oh no, I just missed it. I should have invested my 5,000 bucks because then I would have made money. And this is the mistake that so many people make. This is the reason. Instead of investing that 5,000 bucks at once, what you should have been doing is, of course, cut that 5,000 bucks up. And you could cut it up in bits of 500 bucks. You could cut it up in bits of 1,000 bucks. And that's up to you. But the moment you cut up the 5,000 bucks of budget and you cut it up in little pieces every time you invested it on the market. The first time you're like, I just invested 1,000 bucks over here. And then you'll see it's 1,000 bucks. And the next time when it's going down, what you notice is that, okay, you know, I did a bad job the other day or the other time, and now I'm investing in another red time. But hey, it's buying cheap, and you know, the pain is less because you didn't risk it all at once. So instead of waiting for the best time to come, you're actually just saying, you know what? It's easier to just invest like this. And I know that I have a $5,000 budget, so I have a few more times to bet. And then all of a sudden you'll see you'll have your first win as well. And you're like, hey, I just had my win. This is what the rich and wealthy do as well, next to the liking the button. But next to that, instead of waiting, they just invested their money by spreading out their chances on this particular stock. They diversified their budget as well. So they're spreading out their chances and their risks, but also spreading out their chances of winning. And that's the interesting part as well. The rich and wealthy think about winning, whereas the poor and middle class always think, I might be losing. Now, what were you thinking? So this whole assignment was not about thinking, let's just spread the money. This was actually just testing you, what you were thinking. Were you thinking, if I would have that 5,000 bucks, was thinking about how can I minimize my risk? Or were you thinking, how can I spread the chance of winning a lot? Mind trick number 3 is of course about spreading and buying systematically and creating more chances to create wins. And even small wins are a win. Mind trick number 4 is all about using the time of the market crash. Now, one example is one of the dividend stocks that I have is the Carnival Cruise Liner stock. Now, back in November, when I would invest in that stock, they would give you a dividend of about 5%, which is not bad. Hey, it's not bad. 5% is not bad. If you take a look at Apple, it's a lot less. They're in the holiday class, which is not bad. But if you would take a look right now, the interesting part is, currently, they're giving out a dividend of 12%. Oh yeah, I love that. So in mind trick number 4, what you really want to do is take a look at which stocks are struck the hardest, which companies are struck the hardest, and yet they're still doing just a great job. Invest in those companies because yet, 1, they're giving you a high yield on dividends, and 2, their value of their stock is low. Well, actually, this is low. So the yield is high, the value is low. The moment they grow back, so the moment they go back to the original price, the yield goes down again. You'll still have your high yield, but yet your price has grown in value. That's what you want. That's what all the wealthy people do. Take a look at Warren Buffett. He buys cheap with a high interest yield from dividend. That's how you can grow as well. Let me just write that down. So yes, so it's a red dividend stock day for those stocks. Low value, high yield, but the company is still doing a great job. The current value is low, but it's underestimated because the value is actually higher. But because they want to have their value higher, they set a higher dividend yield. Just to you as an investor saying, hey guys, we're gonna survive this crash, but we need your help. And for the risk, we'll pay you more dividend. That's how you grow your money. And these are the 4 mind tricks that I wanted to share with you that you can invest today, here in 2020, halfway 2020. You can still make your money with the remaining of the year and make a nice profit and have your money safe. Diversify in different asset classes, of course. Create that insurance for yourself. Of course, spread your wins. And of course, invest systematically. Next to that, of course, be sure to invest in those red dividend stocks and think like, you know what, they're just doing a great job over time, but now they need some help. My help in investing them so that they can grow again and I can fill my pockets at the end as well. But it's about helping other people out. That's what it should be, okay? And that's it for today. Thank you very much for watching today's video. Of course, if you liked the video, be sure to hit that like button. And of course, if you're new to the channel and you haven't subscribed to the channel yet, be sure to hit that subscribe button. And of course, if you want to be notified every time a new video comes out, be sure to hit that notification bell as well. Thank you very much for watching today's video. I wish you happy investing, of course, and I'll see you in the next video. Bye-bye.